Hello and welcome. My name is Rupert Pontin and I'm Head of Insight and Communications here at Brego. This is the Brego Auto Intel broadcast for May 2026. It is a little bit late, but please bear with us. So we're going to have a look at what happened in the UK auto retail sector during the course of May, as well as a short summary review of the political position and the economy, and those things together, the impact they've had on consumer behaviour during the course of May. So without delay, let's get ourselves underway, and we'll start with an economic update. So the war with the US and Iran has remained on an unsteady ceasefire basis, but Donald Trump is continuing to claim that an agreement is almost in place to end the war and reopen the Strait of Hormuz, freeing up all those ships that have been sitting there for months. The goal here is, of course, to get the oil moving as soon as possible and reduce the cost of fuel and energy and stabilize the world economy. Unfortunately, there's also further unrest elsewhere in the Middle East, and that has also exacerbated the economic crisis, but it does look like the end is now in sight, which is really positive news. Now, from a UK economy perspective, this remained under pressure, and Keir Starmer is looking increasingly like he's going to have to leave his post as Prime Minister. Now, the April economic KPIs show a conflicting view, really, of what's going on in the market, and that's interesting, of course, given the world economy. One would expect it to look pretty poor overall. Firstly, the inflation rate actually dropped to 2.8%, and that came as a welcome surprise, and that was helped by lower costs for food and non-alcoholic drinks. Now, they sat at 2.2%, and that helped to offset the 6.8% that was in place for transport and fuel costs. Now, in addition, the Bank of England Monetary Policy Committee actually left the base rate unchanged at 3.75, which is also great news. Now, those two things actually really helped consumer confidence because we were expecting that to go from -25 further down. Now, what actually happened was it improved by 2 points, and that was both against expectations, but also very, very welcome. Of course, the business confidence figure remains the same. That's a quarterly figure, and that's still sitting at -65. And again, that's the lowest it's been since Q2 of 2020 in the middle of the pandemic. Now, despite the continued stagnation in the property market, the mortgage rate did edge down by 0.1%. It now sits at 5.1%, but frankly, that's not enough to actually get the property market moving properly. Now, going back to the fuel costs, the ongoing closure of the Strait of Hormuz saw the price of a barrel of oil rise to $110 at the beginning of May. But the good news is that dropped back to $92 by the end of the month. However, it did not change our fuel costs for the better, unfortunately, and the cost of a litre of petrol rose from $1.57 to $1.59 from April to May. And finally, the unemployment figure, that rose again to 5%. And to be honest, that's looking like it's going to continue to rise in the coming months as the economy begins to feel the full effects of the war. So, in summary, we've had another month of confusion and mixed messaging. We can only hope that Donald Trump is indeed very close to an agreement to get that war finished off, and the UK government, as a result, settles down. Let's just hope that that speculation comes to fruition. Okay, so moving onwards, this is what happened in the UK new car market, and this is data courtesy of the SMMT. So the May data showed new car registrations actually totaled 160,662 units, and that was a 7.1% improvement on May 2025, which is another strong monthly performance, showing that there is some registration activity going on. So year-to-date registrations are up 8.7% on 2025, and that remains higher than many expected for this time of year. May also saw a very solid increase in private registrations with a rise of 17.2%. That was off the back of 20.2% the previous month. And this represents a 40.9% market share, which is up 3.5 percentage points on May 2025. Now, year to date, that's a consistent 40.3% market share. It's been pretty much the same over the last few months, and that's positive news. Now, fleet saw an increase, but only of 1.8%, despite the fact that they increased 26.8% last month, and that means 57.1% market share, and that's 3 percentage points lower than last year. Year to date, it's sitting at 57.6%. EV registration showed an admirable 34.2 increase over the same period last year, kind of to be expected, and market share for the month was at 27.3%, and that's 5.5 percentage points higher than May 2025, which is probably not as much as we'd like to see. Year to date, EVs have got a 23.9% share. Remember, the target is 28%, I think, this year, and that is 3 percentage points ahead of last year. Plug-in hybrid registrations were up by 23.9%, which is good news, and that gives them a 13.8% market share. And year to date, they saw an increase of 41.8% on the previous year, so that's also positive. Petrol registrations were down 7.1% for the month, and the market share was 41.2%. and 6.3% percentage points lower than last year, which is interesting. Now, diesel were down by 2.2%. There's not much further for them to go, and that's a 4.7% market share. From an OEM perspective, the top three, so Volkswagen Group led the registration war with 8.8% of the market. That's slightly up on last month, which was 8.6%. Audi came in at second place, knocking BMW out, and they were at 5.7%. And Kia sat in third place at 5.6%. The top three vehicle sellers by range were the Ford Puma in first place, the Kia Sportage in second, and the Vauxhall Corsa in third. There was only one Chinese model in the top 10 in May, and that was the JQ7, and that was off the back of three of them being in there in the previous month. Looking at Chinese brands on sale in the UK, in total, they took 20.4% of all new car registrations. Now, that data does include Volvo and Lotus. So MG had 4.65% of the share of the market, JQ 3.24%, and BYD very close behind at 3.21%. However, remember, the Chery Group as a whole took 6.9% of the market, which is once again enough to have put them into second place, all things considered overall in the marketplace. Now, looking at the UK used car market, and as ever, we're going to be using insight from Brego Whole Market data, and we can see that total advert volumes were down by 0.3% off the back of a reduction of 0.9% the previous month. Now, this shows a level of stability as sales were up by just 0.2%, albeit they were down 7.2% last month. Pre-reg adverts reduced by 4.5%. And now that could have been driven by better competitive pricing of new car sales and reducing the need for those to have been pre-registered. And new sales increased by 7.1% for those cars. Trade adverts decreased by 1%. Now that's interesting, and they were down by 2% the previous month. Now that suggests that there's either less wholesale volume or the dealers are still wary of buying stock given the difficulty in closing sales and poor consumer confidence level, to be honest with you. Now, EV adverts dropped by 12.8% off the back of 7.2% the previous month. Now, that's interesting. Now, that's going to be probably due to improved sales, we think, or perhaps lower stock in market. But we know that EV sales dropped by 14.7% and took 7.8% of all used car sales in the month. And that's down from 9.6% in April. So perhaps there are less used cars in the wholesale market, but the whole EV market is in a state of flux at the moment. And that's due to the issues in the Middle East and people looking to reduce costs. But it's certainly one to watch as we go further forward. Now, hybrid adverts dropped by 3.2%, and consumers seem to be still keen to reduce running costs and are wary of jumping all the way to an EV in one go. Now, petrol adverts increased by 0.2% and diesels increased by 3.1%. Now, that is either due to more stock in the wholesale market or more likely due to reduced sales. And this is certainly worthy of deeper investigation. And those of you that use the Brego platform can do that yourselves using Brego Insight. As we know, sales increased by just 0.2%, which suggests a stable market, if it is a little lower than expected for this time of year and lower than the dealers would like. From a days to sale perspective, they increased slightly to 38 from 36.9. Now, that's disappointing, but it is in line with expectations given the 7.2% drop in sales in April, therefore slowing down the churn of stock. So that was kind of expected. EV days to sale, though, improved by 3 days to 37, and now they're selling quicker than fossil fuels. And that reflects the demand for electric propulsion and its reduced running costs when fuel is still so expensive. Now, the average used car sale price was £16,591, and the average EV sale price was £22,246, and that's slightly up on April, which contrasts actually with the theme of cheaper, older EVs on sale in the marketplace at the moment. The average hybrid sale price was £23,373. So to summarise for the Brego Auto Intel for May 2026, despite the difficulties in the Middle East and the resulting high fuel costs combined with the disarray in the UK government, sales actually remained at broadly consistent level when compared to April. Now, we know that footfall was slower than the dealers would like, and it was certainly more difficult to close sales, and we see that in the data, but we also hear that from the dealers that we worked with. Used EV demand was consistent, but again, closing sales was harder, and there seemed to be a fewer number of EVs in the wholesale market overall. So as such, sales fell, and this is partly due to that tail off in demand following that consumer knee-jerk reaction in March and April as they sought to get themselves into an EV and reduce running costs. So again, this is a trend to watch closely. Hybrid demand has also waned, but there are still plenty of buyers looking to reduce running costs, as we just talked about. But these guys are scared of the jump from fossil fuel straight into an EV. Wholesale demand has been more patchy, and conversion rates at the auctions have been much more varied than they have been recently. Condition of the car is becoming more important as buyers seek the best possible stock that requires a minimum amount of preparation. And that, of course, is because the consumer retail buyer is mindful of the quality of the car that they're looking to buy. So they're really quite picky these days. Looking at Chinese cars, and there were 29,023 used Chinese cars advertised for sale in May 2026, and there were 12,611 that sold. These are metrics that are worth watching going forward. Just to confirm, that figure does include Volvo and Lotus, so it is all Chinese-owned brands. So I know you'll have found this an invaluable review of the UK auto sector, and if you need more guidance and insight, then please read the Brego monthly car insight report, and that can be found on the Brego LinkedIn page and also on our website. Alternatively, please reach out to me by phone, email, or LinkedIn. Brego are also posting insight and updates on our YouTube channel, and that is called Brego-Official. We now also sponsor the Dealerway Dealer Pod weekly podcast, and we've also teamed up with Motor Trade Radio. So we work with Philip Nothard and Curtis Hutchinson, and we are their trade values partner, and we give a monthly summary of used car activity in the UK market. So there's plenty of insight out there to help you. Finally, I just want to reiterate that if you want to improve market insight and understanding of the nuances in today's auto sector, and there are plenty of them, then you really need to speak to the Brego team. Andy, Safi, and Nick would be delighted to show you how the Brego pricing and market data and our platform will help you to improve your understanding of the market as a whole, set better, more relevant strategies, and ultimately increase profitability for your business, because that's what it's all about. So remember, please, the team won't bite. They're here to empower you and make life easier for you. Thank you very much indeed for listening. I look forward to seeing you next month.